back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Ocugen Inc. So currently, Ocugen trades at $2.40 per share. We're taking a look at this company by request. It's down 55% in the last year, and since it went public in September of 2019, it's up about 20%, returning about 7.5% each year. We can see that it's just over its 52-week low, and it's down more than 7 times from its 52-week high. Ocugen is about a $530 million market cap. So let's learn a little bit about the company. Ocugen Inc. is a clinical stage biopharmaceutical company focused on discovering, developing, and commercializing gene therapies to cure blindness diseases and developing a vaccine to save lives from COVID-19. The breakthrough modifier gene therapy platform has the potential to treat multiple retinal diseases with one drug, one-to-many, and novel biologic product candidates aim to offer better therapy to patients with underserved diseases such as wet age-related macular degeneration, diabetic macular edema, and diabetic retinopathy. Ocugen Inc. has a strategic partnership with CanSino Biologics Inc. for gene therapy co-development and manufacturing, and Bharat Biotech for the commercialization of Covaxin in the United States market. The company is headquartered in Malvern, Pennsylvania. So before we get into our fundamental analysis, let's take a minute to remind ourselves of the 4 principles of value investing. So value investing principle number 1. When you purchase a stock, what you're really buying is an ownership share in the underlying business of that stock. Over long periods of time, a stock is going to return approximately what its underlying business returns. Value investing principle number 2. Mr. Market is there to serve you, not to inform you. This means that price does not always equal value, and in fact, price is what we pay, but value is what we get. Our job as value investors is to look for opportunities where price and value are significantly diverging. Ideally, we want to buy into a business where the value of the company is increasing while its price is dropping, meaning that we're getting more bang for our buck. Value investing principle number 3, margin of safety. In order to achieve superior long-term risk-adjusted returns, every investment requires a sufficient margin of safety, and this can come from a variety of factors. Finally, value investing principle number 4, stay within our circle of competence. As an investor, we should not invest in businesses unless we truly know them inside and out and have some fundamental understanding of the essence of that business. There's no reason that an investor deserves to make money from something that he doesn't understand. Staying within our circle of competence helps us to reduce mistakes and develop conviction to stay with a business over the long run. So now that we have that background about Ocugen and we've reminded ourselves of those value investing principles, let's get right into our fundamental analysis, which is taking a look at the financials underpinning Ocugen. We will be performing an 8-pillar analysis as popularized by Everything Money. Pillar number 1, we're looking for Ocugen's average 5-year PE to be below 22.5. So Ocugen has only been public for a little under 3 years since September of 2019, so it doesn't have 5 years of data. However, over these 3 years of data that we do have, this one's still going to be an X. They've had a negative PE, which means that they've lost money. Pillar number 2, we're looking for their average 5-year return on capital to be above 9%. So here we have data that goes back to even when the company wasn't a publicly traded company, so even while it was a private business, and we see that as is common with a lot of biotech companies, their return on capital was very erratic, going all the way down to negative 144% in 2017 and then spiking in 2018 up to 383%. Even still, despite that, their average 5-year return on capital averages out to only 1.5%. So this is under that 9% we're looking for, so this is another X. Next, for pillar number 3, we're looking for 5-year revenue growth. And so while we have data for 5 years here, this one's going to look a little funky because they only earned revenues in 2020, and it looks like they only earned about $40,000. So that's a big X. In fact, in 2021, they didn't earn revenue. That's a pretty bad sign. Pillar number 4, we're looking for 5-year net income growth. This one, again, is going to be an X. Their net income has decreased over this time, going from burning $7.8 million of cash in 2017 to having a negative net income of $58 million in 2021. So far, not so good. We're 0 for 4. Next, we're looking for decreasing shares outstanding. We don't want a business to be diluting current existing shareholders. And here, yet again, we're running into some trouble. In 2017, they had 9.5 million shares outstanding, and that increased all the way to 195 million shares outstanding at the end of 2021. This is a terrible sign, guys. They have diluted existing shareholders by 95%. If you had bought this company in 2017, you now are entitled to only 5% or 1/20th of its earning potential as you would have been if they hadn't diluted you as a shareholder. So this is a silent killer that is absolutely horrible for existing shareholders. Next, pillar number 6, we're looking for 5-year free cash flow growth. And this is, again, not looking good. They had negative $6.4 million of free cash flow, meaning that they burned $6.4 million of cash in 2017. And in 2021, they burned $49 million of cash. So actually, over the past 5 years, they've increased the rate at which they're burning cash, which is not good. So this one is going to be an X. Averaged out over the past 5 years, they've been burning about $20 million of cash each year. So we'll have to take a look at what their balance sheet looks like to see if this is sustainable for them going forward into the future or not. So for pillar number 7, we're comparing their net debt, which is debt minus cash and cash equivalents, to their 5-year average free cash flow multiplied by 5. Ideally, we want their net debt to be below that number. So currently they have net debt of approximately negative $92 million. What this means is they actually have $92 million of cash and cash equivalents if they paid off all the debt on their balance sheet. So that in itself is a good thing. But we want to compare that average 5-year free cash flow, in this case how they're burning cash, multiplied by 5 to see, does this give them enough breathing room and enough runway into the future? And unfortunately, it does not. They burn about $20 million a year. Multiplying that by 5, that gives us about $100 million of expenses. And with no revenue, negative net income, and negative free cash flow, this means that if they don't raise more funds by issuing new debt or further diluting shareholders, they're going to run out of money within the next 5 years. So that's another X, the big pillar of them all. Pillar number 8, we want their market cap to be less than their 5-year average free cash flow multiplied by 20. So currently they have a market cap of $530 million, and this one's going to be an X. They have a negative 5-year average free cash flow. So guys, in summary, Ocugen is an 0 for 8 pillar stock. This one, based solely on the fundamentals, looks highly speculative at best. This is a biotech company, and it's not out of the ordinary for this to be one of these boom or bust type companies where it has very high risk but very high reward. Unless you have some amazing insight here, there's nothing about the fundamentals that show you that this should even be a consideration as an investor. If you're buying into this company currently, it's because you have some amazing insight that doesn't show up in these fundamentals. You know something about their pipeline. You know something about whether they're getting approval on one of these drugs. You also have to understand the potential market for these drugs. But unless you have some sort of insight like that, there's nothing in these fundamentals that suggests that this stock is anything other than a speculative play. Well, guys, that's it for today's stock analysis of Ocugen. This is a first for us, having 8 straight X's on all those 8 pillars. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what company you want me to take a look at next. Have a great day, and thanks for sticking with me all the way to the end of the video.